Here's what I would do if I were you and I was about to turn 50. And by the way, I just did this a year ago. The first thing I would do as I started thinking about retirement would be to evaluate my mortgage. How much money do I owe? What is my house worth? When will it be paid off? And is there a better way to use my mortgage to get me into retirement? There are a ton of options for how to do this. There's lots of different ways to structure your mortgage, your equity, your ownership, your debt, your retirement payments. But you need to have a focused approach. You really need to involve at least a couple people. You need to talk with your friendly mortgage loan officer, and you need to talk with your financial planner. There's a lot of things you need to consider. The first one is, do I have equity in my home? And would I be better off using that equity in a different way than savings plan in my home to prepare for retirement? For instance, if I have substantial equity in my home, but I also have some substantial debt, I might want to use some of that equity to pay off that debt. Paying off that debt may allow me to actually save more money towards my retirement. That may seem counterproductive, but I promise you it's a possibility. And you need to talk with me and your financial planner about whether or not you should be using that equity differently in your home. What about your loan term? You need to look at how long you have left on your mortgage. Are you on a 30-year note and only 2 years in, but you have a ton of cash flow? Maybe you need to refinance that to a lower rate in a 15-year loan to get yourself in a position to go early retirement. Maybe you need to do the opposite. Maybe you're on a 15-year note and you need to go to a longer term to get your cash flow in line. Maybe you didn't just turn 50, maybe you're about to turn 60 and you need to talk about a reverse mortgage and whether you can use a reverse mortgage, essentially borrowing from the equity of your home to make your home payment. That happens a little bit later in life. If you're 50, what else can you do? You can look at a home equity line of credit or a HELOC. A home equity line of credit is a tool that lets you access the equity in your home and use it some other way. Maybe to increase your retirement funds, maybe to pay off some debt, maybe to fix up your home. What about this? Are you in the long-term home that you want to be in? Is this your retirement home? If you're turning 50 or already turned 50, it's not too early to think about how are these stairs that I'm going up every day going to impact me in 20 years when I've got bad knees and bad hips and I can barely get around. Because 20 years from now, you might have to pay a lot more for that one-level ranch house that you're going to want. So you might want to do it now when you're 50 and go ahead and downsize and move into that one-level ranch so you don't have to deal with that later on. These are all questions that my wife and I discussed, and you should be discussing as well. If you need to talk to a mortgage professional about what you should be considering, I'll be happy to have that conversation with you. Just DM me 50 exclamation point, and we'll make it a great year.